Imagine waking up one morning, walking to your front door, and finding an official letter from HMRC sitting there waiting for you. You open it expecting nothing out of the ordinary, but instead your heart sinks as you read that you owe £2,500 in unexpected charges. This is not some distant possibility or fear-mongering story designed to scare you. This is the very real situation that hundreds of thousands of people over 65 could find themselves facing as we move into 2026. The rules are changing, the thresholds are shifting, and the government is not exactly rushing to make sure everyone understands what is happening. If you're not paying close attention right now, you could be walking straight into a financial trap that will drain money from your pocket, money you have worked your entire life to save. But here is the good news. This charge is completely avoidable if you know exactly what steps to take, and that is precisely what I'm going to reveal to you today. If you are new to this channel, let me take a moment to welcome you to a community that is dedicated to one simple mission, helping hard-working people across the United Kingdom understand their money, protect their savings, and make the most of every benefit and allowance available to them. We do not use complicated jargon or assume you have a degree in finance. Instead, we break down every policy change, every tax update, and every opportunity into clear and actionable advice that you can use immediately. Thousands of viewers just like you have already saved money by watching our videos, and I want you to be next. So if that sounds like something valuable to you, go ahead and hit that subscribe button right now and tap the notification bell so you never miss an important update that could affect your finances. Now let us get into exactly what is happening with HMRC in 2026 and why people over 65 need to be especially vigilant. For years, the government has been quietly freezing tax thresholds while inflation and pension increases push more and more people into higher tax brackets. This phenomenon, often called fiscal drag or stealth taxation, means you end up paying more tax not because the rates have increased, but because the boundaries have stayed the same while your income has crept upward. For those receiving the state pension alongside other income sources, whether that is a private pension, rental income, part-time work, or investment returns, the combined total can now easily exceed key thresholds that trigger additional tax obligations. The £2,500 charge I mentioned is not some arbitrary fine. It represents the kind of unexpected tax bill that can land on your doorstep when your total income crosses certain limits and you have not made the proper adjustments to your tax code or submitted the necessary information to HMRC. Many retirees assume that once they stop working, their tax affairs become simple. They believe the state pension is handled automatically and everything else falls into place. Unfortunately, this assumption is dangerously wrong. HMRC relies on accurate information to calculate what you owe, and if there are gaps or errors, you are the one who pays the price, sometimes years later, when interest and penalties have piled up. So how do you dodge this charge and protect yourself from an unwelcome surprise? The first and most important step is to know exactly what your total annual income looks like. This means adding up your state pension payments, any private or workplace pension income, earnings from any work you still do, rental income from properties, dividends from investments, and interest from savings. Once you have this complete picture, you can see whether you are approaching or exceeding the personal allowance, which is the amount you can earn before paying any income tax. You also need to check if you are getting close to the higher rate threshold, because moving into a higher bracket can dramatically increase what you owe. The second crucial step is to check your tax code. Your tax code tells HMRC how much tax-free income you are entitled to and how much should be deducted from your taxable income. If your tax code is wrong, and this happens far more often than people realise, you could be underpaying tax throughout the year without knowing it. Then at the end of the tax year or even several years later, HMRC catches up with the discrepancy and sends you a bill for everything you should have paid plus interest. Checking your tax code takes just a few minutes through your personal tax account online, and if something looks wrong, you can contact HMRC to get it corrected before any damage is done. Another powerful strategy for those with more complex income situations is to consider how you receive certain types of income. For example, if you have significant savings generating interest, you might be able to take advantage of the personal savings allowance or structure your accounts to minimise taxable interest. If you receive dividends, understanding the dividend allowance and how it interacts with your other income can help you plan withdrawals in a tax-efficient way. These might sound like small details, but over the course of a year, Smart planning in these areas can save you hundreds or even thousands of pounds. For married couples and civil partners, there is another opportunity that many people overlook entirely. The marriage allowance lets you transfer a portion of your personal allowance to your spouse if one of you earns less than the personal allowance, and the other is a basic rate taxpayer. This simple transfer can reduce your combined tax bill by several £100s every year, and you can even backdate the claim for previous years you missed. It takes just a few minutes to apply online, and the savings can really add up over time. Now I want to address something that stops many people from taking action, and that is the fear and confusion surrounding anything to do with HMRC. I understand that dealing with tax authorities can feel intimidating. The forms seem complicated, the language is full of terms that make no sense, and there is always that worry in the back of your mind that you might make a mistake and get into trouble. But here is the reality. HMRC actually wants you to get things right. They would rather you check your information, correct any errors, and pay the right amount than have to chase you for underpayments later. Taking a proactive approach does not put you at greater risk. It protects you and gives you peace of mind. If you feel overwhelmed by all of this, you are certainly not alone. Many people find it helpful to speak with a qualified accountant or tax advisor, especially if they have multiple income streams or their situation is more complicated than average. A good advisor can review your entire financial picture, identify opportunities you might be missing, and make sure everything is set up correctly going forward. Yes, there is a cost involved, but that cost is often far less than the tax bills, penalties and stress that come from getting things wrong. As we approach 2026, the window for making smart adjustments is still open, but it will not stay open forever. Every month that passes without action is another month where potential savings slip away and risks grow larger. I genuinely do not want to see anyone watching this video get caught out by a surprise bill that could have been avoided. You have worked hard your entire life, you have contributed to the system, and you deserve to enjoy your retirement without financial shocks. Take some time this week to review your income, check your tax code, and consider whether there are any allowances or reliefs you have not been using. If you found this information valuable, please give this video a thumbs up because it helps more people like you discover this content. Share it with friends or family members who might also benefit, especially anyone over 65 who might not be aware of these changes. Subscribe if you have not already, and I will see you in the next video where we will continue breaking down everything you need to know to protect and grow your money in these challenging times. Thank you for watching, take care of yourself, and remember, knowledge is the best protection you have.